Hey, John Stevenson here, the Guarantee Retirement Guy. So I'm going to go over the step-by-step rules that the IRS has for rolling money into an annuity. There's a lot of different types of accounts, especially if you have a qualified account, whether it be a 401k, 403b, a Roth IRA, a Roth 401k. There's a lot of different types of rollover options, and it's important to understand how they work. And again, it's also important to know that no matter what your situation is, I take care of the rollover for you, or the institution does. So it's not something you really have to be afraid of, but it's also something that it's still important that you understand how it works. Okay, so it's just important to know how the IRS looks at it and what their rules are concerning the rollovers. Okay, so let's talk about, we've got traditional IRAs, which are tax deferred. And when they're tax deferred, they will typically go into another tax deferred bucket, like another IRA. If you want to invest into an annuity, then that's typically what you do. It has to go from one like account to another like account. It's the same with a Roth IRA. If it's a Roth IRA, it just goes into another Roth IRA, and it's a very straightforward transfer between institutions. And then, of course, if you have that annuity contract inside of it, all that income, if that's what you're using it for, is coming out tax free. Any of these qualified plans, you can roll into another, or qualified account, I should say. Any of these qualified accounts, you can roll into another qualified account. It just has to be the same, and that's how you would fund the annuity. Now, if you have a 401k, 403b, 457, they can also be rolled into IRAs. So if you're thinking, hey, I've got this employer-sponsored plan, how do I get this into an annuity? That's how it's done. You just basically take it from those qualified employer accounts and you put them into another qualified account, but now it's individually owned, which of course is an IRA. Okay, tax implications. What are the tax implications for rolling these into annuities? Well, there is no tax implication as long as it is a direct rollover, an indirect rollover, a transfer. As long as it's going from that qualified account to another qualified account, you'll be fine. So don't worry about that. A lot of times people ask me, well, aren't I going to be taxed? No, you won't be taxed as long as you do it right. Now, there's different types of rollovers. Okay, if we're thinking about a direct rollover, this is basically when your employer, so you're sitting here and you're talking with your employer and you're going to retire next month and you're wondering, how do I get this money from my 401k over to an annuity? Well, basically what you would do is your employer, with a direct rollover, the employer basically sends the retirement funds directly to the annuity inside of that IRA. So in layman terms, you and I would get on the phone with the company that is taking care of your 401k. Sometimes it's Fidelity. You've got lots of companies out there that administer these plans. And so what we do is you and I get on the phone with them and we just let them know, hey, the transfer paperwork's coming over. How do we get this over from this account over to the IRA? And if they do direct rollovers, that's the easiest. They'll just send a check straight over to the institution. So let's say you buy an annuity with North American, they'll send the check straight over to North American, and that'll fund that annuity within that new IRA. Indirect rollovers, those are, I would say, less common, but I don't know. The last year, they've been pretty common as far as the people I've been working with, especially if it's like a pension or any 401k. A lot of those 401k providers don't like mailing the check to the new institution. If it's Allianz or North American or American Equity, wherever that new IRA is, usually what they will do, they will send the check directly to your house. And that's just how they like to do it. And a lot of times they will not accept the transfer paperwork from the carrier, which is fine. So they'll mail the check. They'll still make it out to the carrier. So if you're buying an annuity with North American, they'll make the check out to North American, but they will mail you the physical check. And then after you get the check, me or a member of my staff will actually give you a FedEx label, and you're able to just forward it straight on to the company. So that is still an indirect rollover. There's no tax complications, no consequences, because you're not actually putting that money into your bank account. Okay, but I'll come back to that, because if you were to take that money out, let's say you've got a 401k and you decide to just withdraw. Okay, you take $300,000 out and you put it in your bank account. Okay, normally if you leave it there, you're going to pay taxes on it. Okay, and if you're before 59.5, you're also going to pay a penalty. But you have 60 days in which to take that money and put it back into a tax-deferred account, which in this case, if it's coming from a traditional 401k where it's tax-deferred, then you're just going to take that money back out of the bank account and you're going to stick it into an IRA that is tax-deferred. And as long as you do it within 60 days, you'll be fine. It'll still be considered an indirect rollover. Transfers. Let's talk about transfers. Usually when I think about transfers, it's usually from an IRA to an IRA. And that's basically like when people call me and they want to put money into an annuity and they've got money sitting in their IRA, they're not sure what to do with it. Even an inherited IRA, as long as you do it right, there are certain companies where you can just transfer it to another IRA that you own, of course, with the other carrier, and it's just a direct transfer. So what happens is we submit the application, the carrier approves it. Once they approve it, they actually will send over the transfer paperwork, which is usually 4 pages, and they'll send it directly to whoever your fiduciary is that has your IRA, whether it's be Fidelity or Charles Schwab or T. Rowe Price, it doesn't matter. So they will send it over to them, and then that company will then send the check straight over to the carrier. So it's just a direct transfer, okay? And so there's no fees. Usually the only fees I've heard of is if people want it overnighted, then your 401k provider will charge you a $25 fee or something like that. So, but typically with rollovers, there are no fees. There's no fees charged by the annuity company to put your money over. It's just a straight transfer. If you're transferring $100,000, you're going to see $100,000 sitting in that other new account. And it's pretty straightforward. It's sitting inside of that new IRA, or if it's a Roth, then it's sitting in a Roth IRA, but now you've got the guaranteed annuity contract sitting inside of it. And so whether, if that annuity is for income, guaranteed income, then you have, of course, not only your money sitting in an IRA, but now you have guaranteed income for the rest of your life. Now, if you just put it in something like a MYGA or a fixed annuity, then of course it's still sitting there. It's still growing tax deferred, and you have that growth every single year, whatever that term, whatever that interest rate that you were able to lock in, that is what's happening every single year until the end of that. And then at the end of that term, we can then decide we can put that money into another IRA with a different annuity contract, or you can take it out and pay taxes. There's so much you can do with it. So those are the rules with rollovers. Now, with non-qualified annuities, there is no rollover. You've got your money sitting in the bank or in a brokerage account, and you're looking to have some guarantees from it. Well, that's just a non-qualified annuity. Still the same interest rate, still the same guaranteed income. Nothing changes there. The only difference is you're just wiring the funds yourself to the carrier, and you're funding that contract. So it still gives you all the guarantees that you would have had with the other accounts. And in fact, you also have tax deferred status in those accounts as well, which is pretty nice. It's just it doesn't have the same rules that the IRS has where, if you have the required minimum distribution, right now it's 73. They don't have that with a non-qualified account because it's your money. You've already been taxed on it. So you send it into the annuity contract, and of course, whatever comes out of it, you're only taxed on the earnings, right? Because everything you put in it has already been taxed. So I hope that makes sense. If you want to book a call with me and you want to chat a little bit about your situation, you're thinking about maybe doing a rollover, a transfer, indirect transfer, and you're wondering how it's all done, they're all the same. They're all 1035 transfers from one to the other, okay? So don't worry about that. That's something that we take care of you. If you're looking to purchase an annuity, we take care of the whole process. So we just submit the application together. It's an electronic application. And then once it's approved, then all the rollovers, the transfers take place. And I take care of that, but I also take care of it with you so you can kind of see what's happening. So it's important for you to be aware of the whole process, and usually it takes a few weeks. But once it's done, it's done. Then you've got your annuity contract, you've got your guarantees put in place, and you're good to go. Now, keep in mind, I don't go away, neither does my team. Okay, we're here to help you. A lot of advisors will go away because they've made their commission and they're done. That's not how we work. If you're looking for a long-term relationship, regardless if we're paid up front or paid over the years, it doesn't matter to us because we know over the years you're going to need us for other things, and so will your family. So anyways, if that's something you need help with, go ahead and book a call. You'll notice that there is a link below this video. Just click on it and you'll see some available times in my calendar, and I'm happy to help you with whatever you're looking for. So again, thanks for your time. Thanks for watching, and we'll see you in the next video.